Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar extends higher after displaying a stellar performance on Wednesday after receiving an extra dose of encouragement following the conclusion of the US Federal Reserve's last 2023 meeting. As widely expected, the US Federal Reserve left rates unchanged for the fourth consecutive time this year and kept its federal funds rate between 5.25% to 5.5%. In his post-meeting press conference, US Fed Chairman Jerome Powell hinted that there was possible of 3 interest rate cuts in 2024, although he did make it clear that the interest rate cuts would depend on how the economy is doing. Meanwhile, the dollar index, which measures the greenback strength against a basket of 6 major currencies, tumbled from 102.80 to 101.1995 and still expected to continue lower and eye the region of 100 to around 150. So looking at the technicals, we can see that the market still has potential to climb, given that the ADX is bullish, the RSI is just varying up with the MACD. A clearance of 67 figure 25 would see further to 68 cents or around 68.5, with any pullback likely to be shallow and support seen minor at 66.55. As widely expected, also the ECB kept rates on hold at 4.5%. Following the statement, the ECB stated that while inflation had dropped in recent months, it would likely pick up again temporarily in the short term. So there is still a little bit of a mixed view when it comes to the European Central Bank. Nevertheless, the rally that we saw overnight and as the dollar weakens now is at its level that I feel could be extended, that is beyond 110 and maybe up towards 111.5. The technicals are still strong, but the RSI is a little bit overbought, so a small pullback may be seen towards 109.45 before heading higher. But overall, I still feel the market has potential to gain if it clears that 110.15 area and on towards 111. Dollar yen, well, it was all cheers overnight after the market reached its objective of 141.5. In light of the pattern, there is still a further risk to the downside, and that would be towards the region called at 138.45.55. So a little bit higher than where the market is, somewhere around about here, and reassess. Any upside attempts should be capped around 142.45 to around 142.90.95. Following the Fed and also the ECB, the Bank of England kept rates on hold, but came across as somewhat hawkish, as the Bank of England has not ruled out at this stage a possible rate hike. But then again, on the flip side, he sees and was very strong against any rate cuts for next year. But that being said, the market has reached its objective of around 127 to 127.5 and may actually see an extension now on towards the region of 129 and reassess. Gold holds steady since its surge on Thursday, and now the market looks towards the region somewhere around 2038 to 2048.51. With that being said, I do hold a neutral view, given the fact is that uncertainty when we get towards these highs, like previously seen with this blow off top. So therefore, I'd rather sit out for the moment and wait for better opportunities. Wrapping up with oil, all the bullish divergence kicks in and now puts the trajectory towards 72.60.65. That may extend on towards 74.5. Reassess from there in case we get a break, and therefore look towards $78. With any pullback, I feel could be shallow around 70.5 as short-term support. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report. I hope you enjoy the great start to the new weekend.